Hi, and welcome back to another episode of We Hate Insurance. It's where we try and make it a little bit less hateful for you. We're going to talk about how to hack your auto insurance. You know what are each of those mysterious coverages? What's the difference between full and liability only? Are your minimum limits enough? What do you need? What do you don't need? Um, as always, we try and make sure that we give you the information, remind you that you should always have an agent. Insurance is something that's complicated and complex and is necessary. It helps to mitigate our risk. So, yeah, it sucks not knowing it, but if you have a guide, somebody that you trust, that can go over the products with you, make sure you have the coverages that you need. The key thing is find somebody that you really trust. You know. So we'll just jump right into it today. There are 5 basic coverages for auto insurance, and those start out with bodily injury. We call it BI. There's also property damage, which is affectionately known as PD. There's med pay and comp or collision. That's the physical damage on your vehicle. And comp stands for comprehensive. So those are your 5 basic coverages. There's some others that might be of interest to you a little later on, and we'll go over those. Doing something different today. I got some notes up here so that I don't lose my place. So if you see my eyes go a little crazy, that's what I'm doing. So first off, bodily injury. Bodily injury is coverage for the other person if you're in an accident and you're found to be at fault, or it's your responsibility that they got hurt. Now, sometimes it's obvious, sometimes it's not. At the end of the day, when you sign up for auto insurance, you give the insurance company the authority to to take care of all the legal stuff up to your limit of liability. So if you hit somebody or they hit you and it's determined to be your responsibility, your fault, you've signed away the authority to fight that. You can argue with your insurance company or what have you, but they're going to go and do what is industry standard, what's most viable. So sometimes you're going to take it on the chin, and it's going to be, you maybe didn't do what you thought you did, or maybe you did something and it didn't seem like it was your fault. Let the insurance company sort it out. That's why you've hired them. And so the bodily injury portion is just going to take care of exactly what it says. Their bodily injury up to your limit of liability. There can be split limits, or there can be combined single limits. Split limits are per person and per accident. So, for example, $100,000 per person, $300,000 per accident. In the industry, we typically call that 100-300. In the great state of Indiana, the minimum liability limits for bodily injury are $25,000 per person, $50,000 per accident. A combined single limit takes both of those and puts them all together in one number, so that you've got that much money to spend on everybody's stuff. And that's bodily injury and property damage, which we're going to talk about property damage in a minute. So it can be $300,000, $500,000, and then they just use it however they need to until there's no money left in that pot. And each coverage you can consider as a bucket of money, and that bucket is used to pay only for those provisions. So the bodily injury portion of your policy will only pay for bodily injury unless you do a combined single limit, and then it'll be property damage as well. So PD, or property damage, just like bodily injury, is for if you hurt somebody's property, whether it's an automobile, a house, a fence post, what have you, then this is the portion of money that will pay for that. If you had that 100, 300, a very common property damage for a combination of 100, 300 on bodily injury is 100,000. Sometimes it's 50,000. Um, that amount of money is what you have to pay for the property damage that you caused the damage, or it's determined to be your responsibility at the time of loss. Now, the property damage portion, a lot of times people really underestimate this. You know, look at the price of vehicles today. If you hit two vehicles in an accident and it's determined to be your responsibility, what if those two vehicles are $80,000 a piece? I mean, a few years back I might have said that's crazy, but now it's not so crazy. Not just the super premium vehicles, but even, you know, your more moderate vehicles are going up and up in cost. So make sure you got enough there to be reasonably covered. Um, Typically, you want your liability protection to be 2 times your annual salary plus your assets. So if you make, you know, $80,000 a year and you own a home, you're going to want $500,000 to $1,000,000 in liability coverage, because they can go after 2 years of your income and they can go after your assets as a part of that. So that's the two liability coverages, which is uh, bodily injury, or BI, and PD, which is property damage. Now, MedPay is the next one you'll find. MedPay is optional coverage, typically in most states. It covers doctor's visits, hospital visits, surgery, x-rays, anything that your health insurance is not going to pay for, up to the limit of liability. It can, in some instances, it can pay for funeral expenses and be converted into a death benefit. Not all contracts read that way, but MedPay is for you and each person in the vehicle with you, typically. So it's a nice coverage to have. It doesn't cover the other person, but it does cover your passenger, and it's one of the only ones that would cover your passenger. So MedPay. Most states you can opt out of MedPay if you want to. I don't know why you would, because typically it's a very low cost. It's a very small part of the premium in your auto policies. So those are all coverages for other people primarily. The coverages for your vehicle are called comprehensive and collision. Comprehensive is anything that's not a collision, pretty much. So hail damage, theft, vandalism, you know, you get keyed, you get your car keyed, a tree falls on it, it burns up in the garage. A lot of people think your homeowner's policy will take care of the vehicles in the garage, but it doesn't. Each vehicle has its own policy, and if it has comprehensive coverage, it'll be covered. Comprehensive also covers animal strikes. So if you run into a deer, it's not a collision, it is a comprehensive loss. Glass breakage is a comprehensive loss, so if a rock flips up from a trucker and breaks your windshield, that's going to be comprehensive loss too. Usually you're required to pay a deductible, and then after that the remainder of the damage is paid for by this coverage. The specifics on comprehensive is going to be a little bit different company to company, but generally speaking, it's going to cover anything that's physical damage to your vehicle that was caused by something other than a collision. Now, collision is the next coverage that is for your vehicle. It's physical damage coverage for your vehicle if you hit something, collide with another vehicle. You run into a stationary object like a fence post or a guardrail or a tree. A single car accident, like if you roll it over, that's considered a collision. I have seen some companies that cover collision if you hit a really big pothole and it damages your vehicle enough to overcome the deductible, then sometimes that's covered as a collision as well. Again, you're going to have a deductible. The deductible is your retained risk. That's what we call it in the industry. Retained risk means I'm going to say anything that's under this amount of money, I'm going to take care of. So if you have a $100 deductible, the first $100 comes out of your pocket. After that, the insurance company pays for everything. Your premiums, and I'm going to talk about this a little later on, are based on that deductible as well. So the lower your deductible, the higher your premium, because you're not retaining much of the risk. I typically keep my deductibles at $1,000, and when my vehicles get old enough, I drop the comp and collision because, and I'll explain this later, because of the value of the vehicle goes down below what's reasonable to pay premium for to avoid that risk. All right. Now, there's some other coverages that you might need beyond those 5 basic ones. Everybody's buying new vehicles. A new vehicle, and you hear this all the time, it loses a lot of value when you drive it off the lot. When you're reimbursed from an accident, you get the value at the time of loss. If you drive it off the lot and it loses 10% and you run into something, you lost 10% value in your vehicle just by driving it off the lot. If you have a lien on it, or you owe money to a bank, you might have gap coverage. Gap coverage can be included in the loan, or it can be included on your auto policy. Gap coverage covers the difference between the value at the time of loss and your actual purchase amount. So let's say you drive it off the lot, you have it for a couple months, you get into an accident, it's lost $5,000 in value. You still owe that $5,000 because you haven't made the first payment yet. So what's going to happen is that gap coverage is going to take the difference between the depreciated value of your vehicle and what is owed on it, and it's going to give you that money so that you can pay it off and start at zero again. Uninsured motorist or underinsured motorist. This coverage covers you. So if you get hit by uninsured motorist, and in the state of Indiana, it's like 1 in 5 is uninsured. It's 20%. So it's significant. There's a lot of people driving around without insurance, or maybe they have state minimums, and you have a vehicle that's worth more than $25,000. If you get hit by somebody who is non-insured enough or not insured at all, this coverage will cover you without the deductible. Typically, it's pretty low cost compared to comp and collision, but it is an additional premium, and it is an optional coverage. Another coverage you might consider is rental car reimbursement. If you are in a vehicle and damage it with comp and collision coverage, and you have to take it into a shop, and maybe it's going to take a week or 2 or 3 or 4 sometimes to get it fixed, then rental car reimbursement will give you a vehicle for an amount of money. Usually it's determined to be, a set amount per day up to a limit. But it will give you that rental car while your car's being repaired. That coverage costs an additional premium, typically not very much. It might add, a couple of dollars a month if you're paying monthly, just to get that extra security. It's well worth it for me. If you're a business owner, you might consider hired and non-owned auto. Something to talk to your agent about. This is going to cover the liability portion if an individual that works for you is using their vehicle, or you've rented a vehicle and they're driving it, or they're using your vehicle, and that's going to cover them from a liability perspective for business. It's not something you really need to consider if you're not in business or you don't have employees, but if you do, this is definitely something to talk to an agent about. It kind of gets deep in the woods, or in the weeds rather, so we're not going to go into it really big. All right, underwriting. Underwriting is the process by which the insurance company decides can they insure you, and what is it going to cost for them to insure you. That's called premium. All companies are a little bit different, but they're all similar in some ways. Um, they weigh the factors differently, but they take into account mainly the same factors. Number one, age. We all know that young drivers get into more accidents than older drivers or middle-aged drivers. Once a driver goes over age 75, statistically, they have more accidents. So under 25 and over 75, you're going to get charged extra premium typically. Now, this is not every company, but typically you're going to get charged extra premium. There are some companies that specialize in youthful drivers, and there are some companies that specialize in older drivers, and they have an appetite for them, so they'll give you a better premium on policies if you fall into those age brackets. Gender, especially at the younger age, is typically a factor. Some companies don't weigh it a lot, but it typically is a factor. The thought process is, especially in young age, men tend to be bigger risk takers. Not always the case, but statistically speaking. Moving violations. So this is not your seatbelt tickets, not jaywalking tickets. This is speeding, reckless driving, things of that nature. Those will count against you, and they'll cause your premium to go up. Every company weights them differently, plus they weight the different severities of them. So if you have a speeding ticket where you're 10 miles or under over the speed limit, that's not going to be as serious as 30 miles over the speed limit. Some companies won't take you if you have too many moving violations or if you have serious ones. They will charge you extra premium, and they'll go back a certain number of years. Some companies go back 3 years, some companies go back 5 years. Some companies go back a little bit further than that. So try and stay under the speed limit. Don't drive recklessly. Signal when you turn, be a cautious driver. That's going to save you a lot of money. You can't do anything about your age except get older. Just live another year. But you can do something. You can't do anything about. Well, I guess you can, but you can't do anything. You can do something about the way you drive. So drive safely. Now, the final thing that I'll mention as far as premium goes and determining how much to charge you, almost every insurance company uses some form of insurance scoring, which is based on credit scoring. Credit scores statistically can show how what your propensity is to having claims. The more claims you have, the more money it costs the insurance company, the more that has to be spread out over everybody. So most insurance companies want to avoid those kinds of issues. They look at insurance scoring, which has quite a few different data points. It's somewhere in 179 different data points that somebody once quoted to me. But it uses a lot of different data points, and it uses it slightly differently. They don't look at the same things that credit scores look at, although it incorporates credit scores to a certain extent. So if you can, keep your credit score in a reasonable range, and try and pay attention to that, because that will affect the amount that any insurance company is going to charge you for auto insurance. So now, youthful drivers, I mentioned them. I'm going to go into it just a little bit more. Youthful drivers are anyone under 25, typically. Also included in that, some companies say anyone who has less than 6 years of experience, even if they're over 18, are going to be considered a driver, a youthful driver, are going to get that youthful driver rate. And sometimes it'll even include older drivers who just got licensed late in life, like even a 30-year-old. And some people don't need a license or don't need a vehicle insurance for a period of time, and if you say you move to the big city, you use public transportation, you let your insurance lapse, and it's you have maybe 2 3 years and no insurance, that is going to that's going to show, and so they're going to give you that youthful driver rate. One other thing, going back to the previous topic on how to control that premium, is accidents, claims. Claims history plays in big as well. If you have a big claim, that is going to count against you, and your premium is going to go up no matter what company you're with. And if you have multiple claims, then your premiums are going to go up exponentially. And enough claims on your account, not even just you, if it's you, your wife, husband, your child, your cousin, and you're all in the same household, and each one of you have one wreck, that can be enough for the insurance company to say, we don't want this anymore, and then get you off the risk. And then you have to find higher risk insurance. So, forgot to add that into the premium section. The youthful drivers, statistically more likely to be in an accident, higher likelihood of engaging in risky behavior like speeding or distracted driving, texting, girlfriend or boyfriend in the vehicle with them. And they just generally have a lack of experience because they're not on the road all the time, haven't been for years and years. So, once you've got some more real time and you've seen how defensive driving works, you have less accidents, you're less likely to have an accident. So this means that they're going to have significantly higher premiums. You can expect 2 to 3 times the premium for an adult over the age of 25. 2 to 3 times. As a parent of 4 daughters who were teenagers at the same time, I can tell you it's a very painful process to go through, and I've gone through it. I have grandchildren now that are driving, and I can tell you, it just doesn't get better with age. I mean, the whole process of becoming a driver is. I used to tell the kids, you're driving a 2,000-pound bullet, to try and shock them into a realization that it's very serious stuff. But kids are kids, so we give them that time to try and become responsible drivers, and be good drivers, and be safe drivers. But at the same time, the insurance company knows, based on statistical data, that they're going to have more accidents, so we're going to charge more premium. That's just the way it is. And as a parent, it's painful if you're paying for it. I suggest that you have the children pay at least a portion of it. At 16, 17, 18 years old, it's not unheard of for you to pay at least some of that premium. So, a lot of companies will limit the activity or the insurability of youthful drivers. So, you may find some companies that don't want them. It might have to go to higher risk. They have fewer discounts. Sometimes there's a good student or a driver's ed discount. You can always ask for those. Not always. Not every company offers them. And if they have an accident, sometimes they'll take those discounts away along with the accident, just because they've got to get more premium on that account to make sure that it's a viable account going forward. At age 25, those premiums generally are going to go down. So 25th birthday, renew your policy and enjoy a lower premium set. But there's a caveat: if you had accidents recently, or if you've had speeding tickets, if your company re-rates you, that's going to go on there, and that's going to cause those gains that you've made at age 25 to be lost. So, all right. Now, I know we're going fast, but I know people don't want to hang out on here. We're just going to get some good information out to you as quickly as we can, and then we'll dig deeper into the individual topics later. But a lot of people ask, hey, how do I make a claim? Never made a claim, Jason. I've heard this all over and over and over. How do I make a claim? What's the process? It's different for every company, but there are some things that are, pretty standard across the board. First off, if it's a comprehensive claim, that's hail or fire or tree falls on it, lightning strikes, animal, you hit a deer or hit a bird. I just hit a turkey the other day, if you can believe that. That's a comprehensive claim. That's different than a collision claim. Because a collision claim is going to be, something in the neighborhood of hitting another vehicle or hitting a tree or something like that, like we mentioned earlier. Comprehensive claims typically are handled slightly differently. They don't count against you as much in terms of increasing your premium over time. So that's one of the types of claims you might have to file. Collision liability. So if you damage somebody else's property, and that could be their house, could be their fence, could be their maybe you hit their mailbox. That's collision, or if you hit their car, so backed into somebody's car at Walmart or whatever, that's a collision liability. You might have to do that. You're accepting responsibility and letting your insurance company take care of it. Collision physical damage, if you hit another vehicle and you want your vehicle taken care of, that's a type of claim that you might have to make. Doesn't matter if it's your fault or it's a no fault. If it is their fault and their insurance company takes responsibility for it, their insurance company will pay that claim. So, comprehensive, collision liability, collision physical damage. Now, if you had collision damage and the other person doesn't have any insurance, that might be another type of claim. You might make a claim against your non-insured or underinsured motorist coverage. So those are the different types of claims you might make. When you file a claim or when you have an accident, if there's another vehicle involved, you want to write down all their information. You want to write down their name or take a picture of their driver's license and a picture of their insurance card. Those are the best things that you can do. Take pictures of all the areas of the car, where they touched, where you were in the road. Call the police. A lot of times people that hit you, they'll say, we don't have to call the police. Let's just get this done. I got to get out of here. They're always in a hurry. Especially the people that hit you, they're always in a hurry. I don't know why. So always call the police and get a police report if possible at all. If you have to move the vehicles, take lots of pictures before you move the vehicles to get them off the roadway. Stay safe. Once you have an accident, if the cars are not movable, put out some warning triangles if you have those. It's a great thing to keep in the car. If it's nighttime, put out some flares if you have flares. If not, get a flashlight, wave it around. Get out of the road yourself. The first thing to make sure of in an accident is anybody injured. You make sure that you're not injured and that your passengers aren't injured. If you are, report those immediately. Then the next thing to do is check on the other person. We're human beings. Whether or not it was their fault or your fault doesn't matter at this point. Just make sure everybody gets medical attention if they need it. Take notes on what happened because you'll forget. So write down their name, their contact information, their insurance company's contact information, and add all that. And then call your agent. And you can call your agent in the middle of the night. They may not answer, but they'll appreciate having a voicemail or a text from you telling them what's going on so that when they get in the office in the morning, they're able to jump on that claim, either enter it for you or if you've already entered it with the home office, to check up on it and make sure things are going the way they ought to be done. So let's talk about what to expect after you file this claim. You've got all that information. You call the agent, you file the claim, an adjuster calls you. Now, if you're the one at fault, and you may not feel you're at fault, but trust me, the insurance companies will tell you who's at fault. Typically, the police departments anymore do not assign fault, and they may even say, I think this guy's at fault, but they're not going to, unless they ticket them or they arrest them for something, they're not going to put on anything that it's at fault. But the insurance company says, okay, this is your fault, or maybe it's even obviously your fault. Number one, they're only going to pay on your vehicle if you have comp and collision. If it's your fault and you don't have comp and you don't have collision, you have an accident, your bill for your vehicle is yours, period. Damage, if you do have comp and collision and there is damage to your vehicle, damage is going to be paid based on the repair cost less your deductible. And the repair cost, typically now, most insurance companies don't require you to get estimates. You just go where you want it, and they work with the repair shop. So if it's a body shop, they all use the same software, they speak the same language, and they'll talk back and forth with the adjuster. The adjuster is the claims person that's going to help you get the money that you require to fix your vehicle. So that adjuster is going to talk to the repair shop, and they're going to determine what is fair in terms of replacing that vehicle or the damage done to that vehicle. If the repairs are more than the value of the vehicle, you'll be paid based on the depreciated value of the actual cash value. That's a fun twister, isn't it? So what does that mean? So let's say you get on Kelley Blue Book, you look up the value of the vehicle, and it's $17,000. You have $1,000 deductible, and the repair cost is going to be $18,000 to get this repaired. So you're like, well, so I guess it's totaled. And that's what it means when I say the vehicle's totaled. It means the repair cost is greater than the value of the vehicle. At this point, the insurance company is going to go, all right, you had a vehicle that was this old, it had this many issues, it had this much mileage on it, so now it depreciates that $17,000 down to $15,000 less your deductible. $1,000 is $14,000. That's what we're going to pay you, and you're going to be upset because you're going to be like, well, it's $17,000 for that. That's the way it's done. It's depreciated actual cash value. So that depreciation can really bite you, and some people don't feel like that's fair, but that is the way it is across the board. No holds barred. This is how auto insurance is done. You can't change it. That's it. You can argue with the company, but typically you're not going to get much more even by arguing with them, unless you feel like it's really not fair. Maybe your vehicle had some aftermarket additions that raised the value of it. Make sure that the adjuster knows if you had premium wheels, if you had brand new tires, if you had upgrades, you put that nice Pioneer system in it with the big woofers in the back and all that. So at the end of the day, when they calculate the value of the vehicle, they're going to include all that stuff. So make sure they have all that, or they'll just go base model. So the liability payments to people that you injure or damage their property are going to be handled by the insurance company, so that you don't have to. They have the authority to act on your behalf. So even if you feel like you weren't the one that was at fault, if your insurance company says we're going to take responsibility, that's it. They have the authority to do that, and you can't say don't pay them. I don't want them to get any money from my policy. It's off the table. The insurance company has the responsibility and the authority to do that. Now, what if it's not your fault? What if you have an accident, it's not your fault, you're going to make a claim? Let's say the other person has insurance and they're willing to accept responsibility for the damage. So the damage is going to be based on the repair cost as well. You're going to do everything kind of similar to the way you would have done it if you're making a claim on your policy, but you're going to make a claim on their policy. You're going to talk to their adjuster. There's no deductible involved though. So instead of having that $1,000 deductible or $500 deductible, you've got zero deductible. You should get a rental car replacement while your vehicle's being repaired, or until it's settled. So if they determine that it's totaled, then and they offer you the settlement, that's the day your rental car stops. Don't be surprised. It's nothing personal. They just don't want you to have that rental car anymore. If the repairs are more than the value of the vehicle, you'll be paid the value of the vehicle, the value at the time of loss. So that's where you'll get that $17,000. You won't have a deductible and you won't have the depreciation. Still, make sure the adjuster knows all the upgrades that you had to your vehicle. If you put, the spoiler on the back and you've got, the upgraded struts, or I don't know, I'm not a car guy, but if you've upgraded the vehicle, make sure that they understand what all those upgrades are. Let them know, because that will increase the value of the vehicle. And you'll do that because they're going to put you back in a vehicle that's of like kind and quality. It usually is not going to affect your premiums in the future either. When this is usually not counted by most insurance companies because someone else hit you. The same with uninsured and underinsured motorist coverage. So there you have it. Those are the claims. Typically with comp and collision claims that you're working with your own insurance company, your agent can get involved. Typically, agents don't have anything to do with claims. They can advise you during the process. They can help you communicate with the adjuster. They can go above the adjuster's head to the supervisor, but they have no authority in claims. That agent's that's your friend, that's your buddy, that's the person that is going to help advise you. It's going to tell you what's up. It's going to translate what the adjuster's saying, because sometimes they use insurance speak, and so they can help you with all that. They just can't change the verdict or the outcome any. So we mentioned state minimum from the state of Indiana. That is 25,000, 50,000, 25,000. Now it's usually written that way: 25, 50, 25, and that means 25,000 per person for bodily injury, up to 50,000 per accident, and 25,000 on property damage. However, every state is different. They all have different caveats, and I got a list of all of them. It's just crazy. Some used to didn't have a requirement for auto insurance. You just had to prove that you had financial responsibility, which didn't really mean a whole lot. It didn't mean that you had 10,000 or 20,000 or 30,000 in the bank to pay for somebody's vehicle. But now I think every state in the union has a requirement for it, but they're vastly different. So if you have someone in the state of Florida, for example, their liability limits are 10,000 per bodily injury and 10,000 on property damage. So you just bought a 2025 Nissan muckety muck car with auto steering and the sport package. It cost you $45,000, and you get hit by somebody from Florida with state minimums. That's underinsured motorist coverage. That's where that's going to kick in and help take over that. The gap coverage is going to help, keep you from getting, but you're going to pay for all of that. That's extra premium. But you have to be aware, 1 in 6 drivers in Indiana are without insurance. 1 in 5 are underinsured, really. In a city like Bloomington, where there's a big university, there's a lot of people from out of state. You don't know what their liability limits are. Protect yourself. Pay a little extra on the premium and get that taken care of. If you buy and invest in a new car, you're going to have to pay more in insurance, just because it is more expensive, and there's a higher probability that when you do get in an accident, if it's someone else's fault, you're still going to be paying out of your policy. So, new vehicles require the older bells and whistles. If you're like me, buy older vehicles, and if you put comp and collision on them, have a higher deductible, that'll keep your premiums low, drive like your grandma, and you'll do fine. If somebody hits you, you'll be out some money, but you're not going to be devastated, and you're not going to have to pay those huge premiums for a brand new vehicle. If you don't mind paying those huge premiums, then by all means get those new vehicles. So once again, like we said in the beginning, always have a licensed agent with you, someone who's licensed in your state, who can explain the coverages to you. Because I've just explained them to you, and I will guarantee you're going to shut this down, you're going to get off here, and you're going to go eat a bag of chips, and you're going to forget half or more of what I said. And by the end of the week, you're going to forget all but about 10% of it. And that's okay, because licensed agents spend a lot of time in education to learn about it. They stay on top of the latest regulations, and so they can help guide you to what is good for you. Nothing is one size fits all. Everybody's unique. Your risk tolerance is unique. Your situation is unique. Your finances are unique, and this is a financial product. So, all right, improve those credit scores. Stay out of accidents and don't get any more tickets. And if you're under 25, then just wait it out. You'll get a little bit older, and things will be better. I promise. All right. Well, we'll talk to you next time.